in-house accountant, provide tips for everybody dealing with financial basics for all our nonprofit organizations. And Ramona Oliverio, she's currently, as I said, our in-house accountant. She has a master's in accounting and her CPA. She worked solely in public accounting for 8 years. She then started her own company where she acts as a contract controller for many organizations that are mostly for-profit entities, but she has worked and does work with nonprofits as well. In addition to her financial expertise, Ramona could also perhaps give you a few tips about raising chickens if you're interested. So we're not sure who our audience is, but nevertheless, got some really cool sidelines. So without interrupting more of her talk, because we want to hear from her, not me or Brian, take it away, Ramona. Thanks for coming.
Okay. Thank you, Nancy. Thank you, Nancy. Thank you, Brian. So just as Nancy said, we're going to look at financial basics today. I'm going to start off basically talking in broad terms, so general ideas that would apply to any business, any nonprofit, and even in our personal lives. And then we will get a little more specific and adapt this to nonprofits and things like fund accounting and things like that. And so from the get-go, I just want to say that, so I have a slide presentation and I don't want to take credit where credit is not due. Some of these items I have pulled off the web. One, I actually referenced a site that actually Sean recommended to me. And it's actually a very good site for nonprofits, I think. So that will be in the slide presentation. So I just don't want anyone thinking that I came up with all these great ideas. So they are out there on the web. So I'm going to share my screen so that we can go to our PowerPoint. Okay, and let's make this. Okay, perfect. Okay, so financial basics. So let's start off with a very dry definition of finance. Finance is the management of money, other valuables, which can be converted into cash. It's concerned with the maintenance and creation of economic wealth and value. It is also a science that describes management, creation, and study of money, banking, credit, investments, assets, and liabilities. Okay, it's quite a mouthful, right? So like, what does that really mean? What tools does an organization need to track financial success, or, in the case of nonprofits, to meet their mission, to provide programs or provide whatever it is that they are designated that they want to do and want to accomplish. So that's basically what we're going to get to and discuss, but we need to give a little foundation here on finance and financial basics. So we start off basically in any organization, or again in our personal lives, with financial plans, right? So we need a picture of our finance, our current finance situations. We need to know then what our goals are, and that, as we're going to discuss, is going to be like setting up budgets, and then we need the strategies that we want to get, or that we need to get to achieve those goals. So those strategies are going to be things like fundraising or applying for grants or whatever it is that the organization needs to attain those goals. Good financial planning should include details about cash flow, savings, debt, investments, insurance, and other elements of the organization's financial life. So the financial plan and the financial process is basically a logical process, we in the biz feel. So there's some steps, and again, there may be some things that apply to your organization, don't apply to your organization, but overall, we need to, as I've already said, we need to determine our current financial situation, knowing where we stand. How do we do this? Well, usually it's with having books, right? Financial books. And again, we're going to discuss some software programs that can get you there. And so and for those of you who may or may not be familiar with financials, it's things like a balance sheet, which shows your assets and liabilities, and things like income statements, which show your income and your expenses. So again, usually an accounting system will get you to that process or get you through that process. So beyond that, we need to develop financial goals. Where do you want the organization to be in X amount of years? How do we incorporate our mission, or how do we accomplish our mission? We need to be realistic about those goals, and we need to be specific about those goals. Those are the two things that I guess I would say that are pretty important to actually achieving and having success. So third, we need to identify alternative course of action, right? So at some point, we may need to go back and look at the financial goals we've developed, and we may say, so in most organizations, this means every year we prepare a budget, and maybe every 6 months, we take a hard look at the budget, because a budget is an estimate, right? It's a guideline, it's an estimate, and things change. Like this year, this is a perfect example. Organizations have budgets, and things have just been blown out of the water because, you know, the economy has come to a screeching halt, and now we're reopening, and so organizations have budgets and they're worthless at this point. But that's not to say that we don't do budgets. We have to be able to explain why what's really going on is different from what we've expected. We certainly can do that, right, this year and in other years. So that's the key with a budget. It doesn't have to be exact. So you know, to get back to our item number 3, we need to look at things and say, do we need to expand on our current course of action? Do we need to change it? Do we need to take a completely new course of action? And so those are the things that, you know, that you need to look at, and creativity in decision making is vital, you know, to making these effective choices. So along the lines of that, then we need to evaluate alternatives if that's what we feel the organization needs to, you know, that path to move down. And so just realize, which is kind of a daunting thing, but one of the things I found, and I thought, wow, this is really interesting. The statement said that there are consequences to all of our choices, right? So every decision that we make for an organization actually closes off alternative decisions, right? So we need to be aware of that, and that's not a bad thing. We just need to be aware that when you go down one course of action, you are actually losing an opportunity in another course of action, which I guess we don't really look at. And again, that sounds very daunting, because it sounds as if, but I guess that's a 2 feet first, and, you know, roll the cart down the road kind of look at it. But again, if we go back to you know, our plan, and actually if we look at item number 6, we're going to reevaluate these decisions we've made, and we may say, you know what, this was not a good choice, and we're going to choose an alternative course of action. So just realize that nothing is always set in stone. So then once we've gone through and evaluated these alternatives, we're going to create and implement the financial action plan that we're choosing. Okay. So basically, again, if we have a budget, we will then develop an action plan on how to actually achieve the items that, you know, we are looking for in that budget. And to actually implement that, just realize as an organization, as you probably do, that this can take help from a lot of outside sources. It can be, you know, volunteers, bankers, brokers, donors, members. So just recognize that it's not just the organization, but you can incorporate a lot of folks to help you to reach the goal that you're looking for. And then item 6, as I said already, always recognize that you need to reevaluate and revise the plan regularly, because things change or the organization changes. There's a lot of factors that can come into that. So again, just kind of quickly, to another way to kind of look at this planning process. Again, it's kind of some of the same things that we had talked about, but I wanted to give a little different aspect on it, or different throughout something different as far as the planning process. So again, step 1, we need to know where we stand. We need to create a financial plan, understand our current situation. That's the way that we, or the starting point is to understand our situation so we know where we're going with our financial plan. So this is basically listing your assets, your liabilities, the balance in cash accounts, any investments that, some nonprofits, especially larger ones like universities, and they have endowment plans and other things like that. So basically we need to look at all these things, evaluate where we're at. We need the jumping off point to get to number 2, which is to set our goals. Okay. And goals may be, something very large, be something very small. And in our case, with MotorCities, so we have a strategic planning committee that basically sets some of these goals for the organization to basically, put their mission out there in the world. So that may help if you're a very small organization or you're just starting out. You may not have that in place yet, and that's okay. But there's different ways that you can set your goals, not just internally, but you can use your board or your committees to get there. Plans for the future. So that is basically in this financial planning process, 5-step plan, that is basically our budget, okay, or something close to a budget that you would like to work with. It's again, it's a way to keep things in check and keep us focused on where we want to go. So step 4 is basically, it's mostly about, accessing money, managing money so that we can reach our short-term goals, but that those short-term goals then will lead us towards our long-term goals. So in the case of a nonprofit, we need to look at, we have operating expenses, right? So we need to look at ways that we can decrease our operating expenses so that we can put more towards our mission, basically, and the items that are the programs that we want to have the organization do every year, basically. And once again, step number 5 is, as you notice, we are coming back to review, right? So your financial plan should be a living document, so to speak, that we can, again, go back, assess, and review and change if necessary. We don't have to be spot on with things. It's a guideline. It's what I like to call an educated estimate. And we will talk a little further on here on actually some tips onto, I'll tell you how we do the budgeting process at MotorCities and how I've done it or prepared it with other organizations to maybe help you, to guide you a little bit on how to do that. And with respect to budgets, which I'll probably repeat when I get to there, there's no point in setting up budgets if you're not going to review them, and if you're not going to assess if you are even close to what you've estimated. once again, things don't, it's not a spot on, you got to be right to the dollar on it. Things could be blown way out of water, but what you need to know is that you can explain why it is different, and then assess whether or not, sometimes it's a good difference. So sometimes you know, the hope is that you have memberships double, or you have sponsorships triple, or you know, get a grant that you weren't expecting to get. So it's not always a bad thing when things don't match in budgets. And so we need to be aware of that. But if we don't review them, and if we don't assess how we're doing with regards to what we thought we would be doing, there's no point in having a budget, because if you're not using it, if it's just something that you do every year, that doesn't really help or the organization, I feel, and a lot of other people feel too. Okay, so let's get a little more specific to nonprofits. And I do have a website there, and this is something that was, as I said, Sean, the executive director there at MotorCities, had suggested, and it was a great suggestion, thank you. And so I pulled out some things, I added a few things, but I used their general outline. Basically, this is I guess I would term this more of a, you know, you're starting a nonprofit. How do or what are the things that you would want to look for in a well-managed, not necessarily managed, but well, as far as financial department, you know, what are the things that we would be looking for that we could walk in and say, wow, you know, these people are on top of their finance situation. Not necessarily, you know, how much cash you got, but that your procedures are, you know, moving towards the right direction, or in a good place. So we have, first off, find a nonprofit friendly bookkeeping solution. So this basically can, in very small organizations, may be the treasurer of the organization that sits on the board. It can be a, you know, an in-house. Sometimes it's someone who shares duties, basically, that that not only does accounting for the organization, but you know, does other things for the organization. And in you know, final instances would be just a full-time person who has bookkeeping background or has some sort of financial background, and like such as myself, where MotorCities doesn't need someone to be there 24/7. So basically they have contracted out, and that's what I do for them. And in the situation of some places or some organizations, they like somebody outside of the organization. We do go through a formal financial audit. I know there are step down financial, you know, there's reviews, there's compilations, but because we receive our money federally from the National Park Service, that is a requirement that we go through an actual financial audit. So we have an outside CPA firm that comes in and does an audit. And it just lends, I think, a little more credibility that you have someone outside the organization that is actually preparing the financials and taking a look at everything. It's not a requirement, so that's not what I'm saying, but I think you have to look at your organization, and maybe to start, you don't need that, but then as you start moving along, you may fall into a situation where you feel that that is necessary or something that you would like to have. So obviously a person, which I just said. So, and then that person should kind of set up these 4 bullet points that are here. They need an accounting system, right? So, you know, the receipts in a paper box is great. When I was in public accounting, we got a lot of that for tax returns. So that was always fun to make tax returns out of receipts and out of a box, but out of a shoebox. But probably not going to work for an organization where you have people donating, you have sponsors, you have folks giving you money, basically. So, you need to have some sort of an accounting system or journal system. And for, again, smaller organizations, starting out with Excel, starting out with something very basic, that's okay. But to be honest with you, a program like QuickBooks is probably the easiest and most, financially, it's not a huge burden. If you purchase the QuickBooks, the standalone version, you can get it, I think, as low as maybe $150 to $200, and that's something that can last for years and years and years. You don't have to, so you're making an initial relatively small investment for something that will basically print your checks for you, do all this stuff that if you were doing on your own, it would take a lot of your time, and it also will pull together financials for you, which is really the time-consuming aspect. So if you're trying to create financials from an Excel spreadsheet, you're gonna spend a lot of time doing that. So accounting software, a dedicated bank account. Again, I have worked with folks that have started up nonprofits, and it's like, yeah, no, you can't use your home bank account, or I mean, even I worked with a church, and I worked with a committee within the church, and basically we even set up the committee's own bank account just so it wasn't commingled with the church's, Sunday contributions and things like that. So just be aware that you should, good signs or good solutions for financials are basically your own bank account. And then, as we've talked, and we'll talk further about creating budgets in a way to produce accurate financials, which we mentioned. So some sort of an accounting software program is I think a good choice. Oops, got ahead of myself. Okay, so we need to basically find the solution that will also allow us to have what's called fund accounting. Okay, so organizations, nonprofit organizations, basically they are on a system within, we call it GAAP. Okay, and so they basically use fund accounting. What does that mean? Okay, that basically means that if we have a project, okay, so say like MotorCities, we are doing this highway sign project, we're doing the Fort Street Bridge project. So if I write a check to MotorCities and I say, I'd really like this to go to the Fort Street Bridge project, MotorCities needs a way to make sure that my donation has been spent on what I would like it designated for. And that's basically what fund accounting is. It's just different buckets within the organization that are holding money that pretty much has to be used for that project, especially if your organization receives grant dollars. So if you apply for a grant, and as many of you know who have done or are doing this, you have to be pretty specific. X amount of dollars or percentage of that grant is going to go towards, the planning aspect. X amount is going to go to the actual construction aspect if it's something that you're constructing. X amount is going to go back to the organization as management, as promotion, as community outreach, whatever it is that is designated in that grant. And you have to be very specific when you turn in. It's just like for us, I guess, if you are a grantee, because we do give grants out at Motor City, you have to be very specific with what you have spent your dollars on when you turn all those receipts in. And Brian has the joy of going through all of them. So you need a system that will allow you to track that, a little bit simpler than, again, throwing all those receipts in just a box. So not to keep promoting QuickBooks, because Peachtree does this also, but I think that QuickBooks is an easier program for folks who don't have an accounting background to understand. QuickBooks has a function called a class function. So with this class function, you can put you know, write a check, and then it'll actually say class, and you could say, you know, this is the highway sign project, and you can set that class up, and then I can go and actually print a listing with all of the income for the highway sign project and all of the expenses for the highway sign project with literally just one click after I've set it up. So that is something that you know, your organization should take a look at as you grow and as you start getting money from different sources for different projects and different work plans. So as your organization grows, so again, this is kind of walking us through, you know, a new nonprofit. At some point, you should start performing what we look at to be good accounting procedures, okay? So good accounting procedures are basically, one, performing bank reconciliations monthly. And I know that, again, it's such a big word, reconciliation, right? But basically, what we're looking at is we get a statement at the end of the month, and it says I have $100 in the bank. Well, I might have written 3 more checks. So $15 of that has really been spent, and it hasn't cleared the bank yet. And also this month we got a $200 contribution, and it hasn't cleared the bank yet. I took it in on June 29th and it hasn't cleared. So it's all really a bank rec is this is what the bank says, but we're saying we've really spent more money, it just hasn't cleared, and we've taken in more money that hasn't cleared. That's all it is. So again, it can be very daunting, but it's something that should be done monthly. We should do it personally too. Because I mean, we had a situation, and not just here, but I've had it with other clients, where the bank actually debited money out of our account, and it was like, well, what is this? So if we hadn't been doing a bank rec, it might have taken us longer to find that. We may not have found it. And I've again, unfortunately, in the where I think some people put their smarts to not such good uses. You know, there's folks that create checks. I've had organizations that have had bogus checks go through. There's just all sorts of things. So performing a bank rec, besides just, you know, monitoring and looking at your bank account every month, basically is a very good, it's a necessary, I think, accounting procedure, because you know, again, it's not our money, especially in a nonprofit. Someone else has given us that money, and we have a fiduciary responsibility to make sure that it is not, you know, being basically taken by folks who shouldn't have it. So that is one of the biggest things. And the other thing, as an accountant coming in and looking at financials, I can feel assured. Now, things might not be in the right spots, right? So something in office supplies might be in repairs and maintenance or whatever, but I can be assured that everything is in those books if a bank rec is done, right? As far as cash spent and cash received. When I take a look at, I at least know that that has gone on. So that's again, I feel it's a necessary procedure. And then eventually, as you get larger, really you need to work towards separation of duties. We struggle with this, and actually pretty much all of the nonprofits that I've worked with struggle with this because they are smaller, and it is difficult to have separation of duties. And that kind of goes into, or as an extension of the second item there, the approval systems and purchase orders. So separation of duties basically means, you know, someone's opening the mail, and that person is then saying, okay, here's all these bills we've received, and here's the money we've received. So now, if we think about it, if we have the same person, and again, if you're just starting a nonprofit and there's you and another person, or maybe it's you, you're not going to have separation of duties, right? So that's understandable, but we need to move towards someone opens the mail and then that person is not the same person that is recording things in the financial program, because the thought is that they could not record some of the bills, not record some of the deposits, or beef up the deposits when there really isn't, so that, you know, the financials look better, basically, if they're trying to give them to a donor, or there could be some other impropriety going on. So this way, by having someone else taking a look at the actual bills and approving those bills, and or using purchase orders. So if we know we're going to purchase a new piece of equipment or something like that, or new computer system, we know that that has been you know, looked at and is approved by somebody else. So those are, I think, some of the basic things that are good procedures that we need, you know, as far as within a financial system, not just a nonprofit, but really anywhere. So I did have a, basically, so when we, again, with separation of duties, so someone opens the mail, there's going to be someone recording deposits and recording expenses, someone who actually makes the deposits, and then there needs to be somebody who makes sure that the deposits that came in the mail or came at an event have actually made it to the bank. Someone has to approve expenses, and then someone has to write the checks, and then eventually signing of checks. In our situation at MotorCities, basically we have board members. Our executive director does have, some organizations, they do not allow for the executive director to sign checks. We have a threshold. And so once again, that every organization has to look at what works for them, and what is good accounting procedures, you know, what everybody can live with. And so I've been in organizations where, you know, the executive director has only signed grant approvals and things like that, but didn't sign checks. So again, you have to take a look and see what works for you in the organization. And nothing's right, it's not like this is a right way to do it and a wrong way to do it. So just recognize that. So then another item of that basically nonprofits have to post in their books as opposed to for-profit entities is in-kind donations. So not only do you have to keep track of grant dollars that have come in, or donations that basically have been specified for certain programs, but we may have in-kind donations. So for those of you, pretty much if everybody's in nonprofit world, you all know in-kind donations, you know, that's basically an attorney who volunteers their time, and they basically don't send a bill to the organization. Or it could be a car that basically has been given to an organization, and the organization's either going to use it or they're going to raffle it off. So it's anything basically that is not a check or cash, some form of cash. So sometimes the organizations will have a little an issue, not necessarily an issue, but they're like, well, how, you know, what do we do with this? How to record this? So basically, the IRS says that we need to record this at fair market value. So what is fair market value? And I have the actual IRS definition. It's what a willing buyer would pay and a willing seller would accept for the property when neither party is compelled to buy or sell, and both parties have reasonable knowledge of the relevant facts. Okay, so that's specific to property, but it also can be fitted to our lawyer example, right? So the lawyer comes, they do 3 hours of work. You say to the lawyer, well, if you did send us a bill, what is your hourly rate? It's $100 an hour. Okay, so now we're going to put into our financial package, into our financial software, basically we're going to set up an account that's in-kind donations, right? In some places, again, if they get a lot of in-kind donations or they get different in-kind donations, they want to specify between what are professional services, what are, so we have to do this in our organization because we are audited. And so that basically they need to know what are our match in-kind donations, what are actual physical in-kind donations that have made to us. So furniture, a car, a copy machine, you know, whatever it is, and what kind of, you know, professional in-kind donations we've had. So have we had, you know, an accountant who's given ours, an attorney, or you know, somebody in the social media realm, like an advertising company or something like that. So basically, accounting is a dual entry system. So we would post the income that we've designated, the fair market value income, as income. That is a credit, as we say in the accounting world, and the debit side would be to whatever the expenses that we would have had. So we would have had legal expenses. So we would increase our legal expenses, but increase the income. So the effect to the books of the nonprofit is zero, right? It is also zero to cash because we have not had to spend cash and we did not get cash. So that is kind of the bottom line effect of in-kind donations on our books. But it also gives a truer picture. If we were not to record it, we wouldn't be giving a true picture of what's going on with the organization. Okay, so budgets, which we've talked about in general as we've gone along here. So you should have a budget. We've already established that. I did put, this was in this link that was at the start of this. You can go to the National Council of Nonprofits. There are other things there, so that might be a website that you want to look at. And they do have guides to creating budgets and you know, what to do with budgets and everything else. So basically, in general, creating a budget involves 4 steps to make it, I guess, easier, or to just give you some framework. Let's put it that way. So we want to basically determine what our nonprofit wants to achieve in the coming year. So as I said, in our organization, we have a strategic planning committee, and they may give us the focus on you know, what we want to accomplish that year. It could also be that the organization wants to have a major event that year. They want, or they've had an opportunity to partner with someone else to have another event, or you know, have a project, something that, some sort of community outreach project, some sort of education project. So basically, we need to, you know, identify, and of course we want to do everything, right? So this is where the be realistic and be specific comes into creating your budget. Do we really think we can do these 10 things? Maybe we should tackle 5 things this year, put 1 on the back burner for next year. So those are the things that you need to assess as you go along with this. So again, we then need to, talking about being realistic, we need to create realistic estimates of the cost to achieve these goals, and in the case of maybe an event, what kind of income we're going to receive. So at any point in time, what I usually do for myself, and what most of the organizations I've worked with have done, is be conservative. So we overestimate our expenses, we underestimate the income that we basically expect to be receiving. So that usually helps because I think it helps to be realistic on what exactly, or where exactly we want to go with this. So as far as beyond events, or beyond projects that we're doing, we also do have these operating expenses, right? We have wages for employees and benefits. We have office expenses. We have the copier that has to be maintained, the lights, the rent, the lights, all these things. So with respect to those or items on the budget or in the budget, what we usually do, and what pretty much most of the organizations, unless it's a new organization, we look at the prior year. Okay, so we say pretty much if you're going to know what your rent is. Okay, and it may be that every year your rent goes up a little bit, or it changes mid-year, or however that is. So a system like QuickBooks basically will actually allow you to take your prior year budget or your prior year actual expenses and basically use that, divide it by 12 and use that. And then you can, bump, like, we'll bump utilities up a little bit because prices go up. We'll bump phone up or maybe not, because we might be in a phone contract with AT&T or with whoever it is that says we have 2 years at X rate. Okay, Comcast, WOW, whoever your internet provider is, same thing. And to be honest with you, it's actually a good thing to do the budget, because it also causes, or it allows, I guess, the organization to take a look at things and say, because sometimes things inch up, as you know. I mean, sorry, Comcast, I'm gonna rag on you right now, but like, we look at our bill and my husband, and it's like, wow, how did this get to be this? Why are we spending this? And so it allows the organization, or again, in our personal lives, to say, wow, maybe we need to call them and see if we can get into a different plan. Maybe maybe we need to switch providers. So the budgeting process will help you, especially like with insurance, for organizations, before you know it, your umbrella package has, the $100 here, $100 there, $100 there. So it allows you to look at those insurance packages and basically say, do we need more insurance? Do we need less insurance? Is there something we can change on this? So I think that also is another good thing that comes out of preparing a budget. So our item 3 is to estimate what your income sources are for that year will be. So again, this is going to look to however it is your organization takes in money. Is it grants? Is it memberships? Is it sponsorships? Is it, different events that you're doing? And again, be realistic. I would say, most of the time, in a lot of, if it's a new program that we're doing or a new event, we are pretty we're pretty conservative, I guess, with, and sometimes if it's small items, we don't even put income in, because we'd like to know that when all is said and done, we're not overstating what we think is going to happen, so that at the end of the year we're like, oh geez, we thought we were going to get $30,000 for this event and we got 10, and then we're in trouble because we're over basically on our budget or under budget. So again, item 4, like we've talked about, alter your budget to align expectations with reality. So reality is key. Be realistic. And again, some people get hung up with budgets because they're like, well, I want it to be exact, and I want it to be, and it's never going to be. If it is, then you should probably play the lotto, because if you can figure that stuff up to a T, then you're either lucky or you have a real handle on numbers. But so again, use it as a guideline. Don't get hung up on it. It's got to be exact. Sometimes you just got to pick a number and go with it. And like I said, hopefully it's an educated estimate. So, okay, so their item 6 that they offered was to learn how to create and analyze financial statements. So again, if you're using a program such as a QuickBooks, and there's other programs in somewhere in here. I think it might be along the next in the next slides, but they in this this link that I looked at, they also gave a software program called Nonprofit Treasurer and Aplos, and they said they were specific to nonprofits. I have to be honest, I've worked with neither one of those. I worked with QuickBooks, Peachtree, something actually called MYOB, which is Mind Your Own Business, and a lot of other programs that are probably a little, they're more geared towards accounting firms, which would not be appropriate for really most organizations because they're a little more detailed as far as the accounting aspect of it. Nothing that you would need. But I guess I would take a look at those other programs. If you want something, I mean, I probably would say that 80% of the organization, maybe even as much as 85% of the organizations I work with use QuickBooks. Again, I'm not touting that, but it seems to be easy to use. There is an actual QuickBooks nonprofit version that basically labels things, statement of financial position, which for for-profit entities, it's a balance sheet, okay? And so the program that we use calls it a balance sheet, but in the nonprofit world, it really is a statement of financial position, okay? So it shows our assets, it shows our liabilities, and it shows our carryover, you know, fund balance from year to year as we close that, close our statement of activities, basically, so our profit and loss items, as we close those in, that carries forward every year as our net, you know, fund balance. So again, if you're new to this and you're taking a look at different things, a lot of places, a lot of these software places will give you 30 days free trial. So it might not hurt to take a look at either of those programs and see if they offer more. And you can certainly use the QuickBooks Nonprofit. It is a little more pricier. I have not worked with that, or I've not had an organization that uses it. I do have organizations in the construction industry that use the QuickBooks Construction because they have some things inherent to the construction industry that it actually handles quite well. So that is something to look at too, possibly the QuickBooks nonprofit version. So either way you do this, again, if you're starting out in an Excel spreadsheet, you're gonna have a hard time creating financial statements. Not necessarily a hard time, but it's gonna be time consuming. So the three things that we look at are this balance sheet or financial position, statement of activities, which is a profit and loss. So basically our income less our expenses, and a statement of cash flow. So the statement of cash flow, for all intents and purposes, is really takes our net assets from this fiscal year to this fiscal year, like to the current fiscal year to the prior fiscal year, and says our net assets went up. Okay, that's our hope, right? So our cash position went up, our receivables went up. So overall assets went up. Our liabilities basically went hopefully down. That's what we usually like to see. So that is basically, it starts with our starting cash, and it reconciles to where we are at with our cash at the end of the fiscal year. So again, here's how the net assets went up. Here's how the net liabilities, well, I should say up or down, went up or down. And then here's our statement of activities, up or down. And then we come to this ending cash flow, or really cash position is really kind of what it is. So when we talk about it within MotorCities and within other organizations I've worked at, our statement of cash flow really, we do like maybe what we call they call it a rolling cash flow. So that is something that you might, as a startup, and even in our position where we're at, we kind of take a look at, here's what we have coming up. Are we going to have the cash to meet those needs basically based on what's coming in and you know what we have in the bank. So some people, when they say statement of cash flow, that's what they're thinking, and that is also very useful, and I do recommend that organizations, you know, take a look at that too. Okay, so we may have some questions that have popped up, but I'm going to address 3 questions that were in advance. There was actually 4 questions. One was about budgeting, which I think we've discussed. Someone else had asked about, it just said information related to 501c3. So I put some information here, just so you know. Tax exempt status is actually different from what we call nonprofit status. So really, just like corporations, nonprofits need to incorporate within the state. Okay, so you need to start with the state. You need to, you know, petition to them, so to speak. There is a form that you fill out, and you say, hey, we're starting up, we want to be a nonprofit. Then you move to this next phase, which is the IRS, to actually get tax exempt status. There are different entities. There's, for the most part, most are 501c3s, but there are other entities. There are 501c4s, there's 501as. So you can read all about that if you have nothing better to do. This probably would have been better back in March when people had nothing to do during the COVID months, but the stay-at-home months. But IRS Pub 557 is a resource for basically for tax-exempt entities. They file their own tax returns. There's, you know, it's basically based on your gross receipts, gross income, and the 990PF is for foundations, basically. I would say to seek out a tax professional, because to be quite honest with you, I prepared 990s when I first started out because we had to have our hands into everything. But it is its own beast, and I don't even lend any support towards it because I would not feel as competent in my abilities, because once you get away from working with it, and they've changed every year, they seem to be changing just like regular taxes. So it has its own little ins and outs, and if you're filing a full-on 990, there are a lot of ins and outs. So MotorCities does file that. We have a firm, the firm that does our audit, and then we take a look at it for inconsistencies, but it is quite a beast. And just a little statement just to remind you, so not all contributions by donors are tax exempt, and that is actually, I'm going to shoot to this. Someone did ask about that, about tax deduction to members or donors, and I'm not quite sure if this is going to answer their question, but basically, you know, I think the easiest way to look at this is either someone donates something or you have an event. Okay, we're going to have a dinner, and basically the tickets are $100. What we need to do then, all organizations need to send acknowledgement letters, one way or the other. Okay, the easiest is someone writes us a check for $100, and we say thank you very much for the $100. Where we have more of a difficult time is when we do something like an event with a dinner, and the ticket's $100. So now what we need to do is we actually need to acknowledge that goods or services were provided for that donation. So in a donor letter, the IRS says these are the things that should or you know, must be included. We have to list our tax exempt status, meaning we're a 501c3 organization, our legal name, the name of the donor. So if Bob Smith writes us a check, then we need to put it to Bob Smith. You know, Bob Smith can call up and say, I'd like it to be Smith Construction. Then it's like, well, thank you very much, but then you need to give us a check from Smith Construction. So, and the reason for that, the IRS says, is so that there's not duplicate taking of that donation. Basically, they don't ask for the letters, but if they were to come in and audit, you know, that's their reasoning for it. The date that gift was received, a brief description of that donation. So if it's cash, it's cash. But if it's, again, if it is, you know, furniture or whatever it is, you know, just a brief description of what was given, and then an acknowledgement of any goods or services. And beyond that, which I did not put in here, but probably should have, you need to acknowledge if there was no goods or services. So a lot of times, if you've noticed, if you've given donations or when you've given donations, it'll actually say, there'll be an asterisk and it'll say no goods or services were provided for this $30 check, basically. I mean, it doesn't have to say $30 check, but so you want to acknowledge the yes, it has, or no, it hasn't. That is a good record keeping or good suggestion, basically, for you to do for your donors. And then there also was a question, and the question again was just managing employee pay and taxes. So I wasn't quite sure exactly or specifically what the person was asking, but I threw these items out there. If you are, you know, starting up now with employees, you're growing, getting bigger, no matter what it is you're doing, for profit, not for profit, you need to use the service to perform payroll. Payroll has gotten out of control as far as, I mean, we're going to have new forms that are not even out yet that are going to be for this, you know, the third quarter here, because of the CARES Act and the deferral of payroll taxes. And so you will spend a lot of time trying to figure out what forms you need. And not only is there the federal level, but there's the state level. So there's state unemployment, there's state withholding. It's just overwhelming, and it's better, believe me, it will be money well spent to use a payroll service. There's a lot of them out there, the big ones, you know, ADP, Paychex, Payroll One. There are smaller local ones, and they do a great job. They all do a great job, honestly. And so ask your friends, neighbors, colleagues who they use, and go from there. As far as using that. And I guess the key thing, I guess, with nonprofits is just to know, even though your organization is tax exempt, your employees' wages will not be for them, okay? So they will get a W-2, there will be FICA taken out, there will be federal, state withholding, they have to claim the income. So just because it's coming from a nonprofit doesn't mean that it will be of no income inclusion to employees. And then another thing I just threw out there that I know our organization uses and other organizations do is, you know, there are online industry surveys out there that can help you to determine salaries, basically, if that's something that you need to look at. Just know that there are resources out there. And of course, that also is dependent upon the cash and resources of the organization. So I'm gonna do, I guess, a stop sharing and go back and see, has there been anything else, Brian? Oh, there you are.
Yeah. We do have a few questions, and it may have been answered. Of course, we got Steve Purdy on the line here, so you can clarify too, Steve. But he asked a question about giving an example of income to a nonprofit that is not tax exempt, as in the donor. And I mean, you gave an example of how a donation that's tied into an event, that only a portion of it can be tax exempt. But maybe Steve, if you want to clarify a little more, you know, example.
Yeah, I was wondering if there's some income in terms of donations. I understand the dinner example. In fact, I've been involved in that many times. But is there any other kind of donations to a small nonprofit that the nonprofit must pay taxes on?
Yeah. So as far as donations, not necessarily. How's that for an answer? So if a donation comes to an organization and it is basically like MotorCities, we send out for memberships, we send out, and it's within the mission, basically. So this really goes to more of items that are not, you know, like a car. There's things like that that have, but for the most part, what donors give you, yes, it will be tax exempt to the organization. Where the not so much comes in is, like in our case, we were going to sell items or have items on our website, such as t-shirts and bottle openers and other items that you can purchase with the wonderful MotorCities logo. We basically then have to pay sales tax on that. And yes, and if the IRS has actual numbers, and they change every year, so I apologize, I don't know what that number is, but if you as an organization pull in money that is not specific to your mission, so selling bottle openers is not specific to MotorCities mission. So say people just loved our bottle openers and they bought and we sold $5,000 worth, right? We would probably have to pay tax on like actual corporate tax. It's at a different rate, and there is like a threshold, you know, if you get a few $100s in, they don't count it as, but they used to actually file a form called a 990T. So that was basically income producing items that a nonprofit sold. And so that's where that comes in, where not all donations are basically tax exempt.
And my other question was, what's the minimum reporting requirement for a small 501c3? Is there one form that you can file just to report that you're still there and what your activity is?
So they did talk about this, and I have it right here, the numbers. So if gross receipts are under $50,000, there is what's called a 990N, and it's actually, they call it the postcard return. So it's N as in Nancy, 990N, and I think that would probably suffice. What a lot of people do is they just file, even though they could file a 990N, they file a 990EZ, and that is gross receipts that are under 200,000 and assets that are under 500,000. And again, it's a pretty basic. The 990N has really no information other than you exist and here's your gross receipts. The 990EZ does get into a little bit more of showing your income and expenses. I think it might even have a basic statement of financial position, so basic assets and liabilities on there. And that's more to prove that you're under the 500,000 assets and you don't need to file, you know, anything more than that, like a full-on 990. But yeah, I would say the 990N would be the way to go.
Great, thanks. That fits me.
Yeah.
Well, Ramona, is one of the examples that you gave, and you talked about the example of someone donating a car. Was that an example? I'm reflecting back on MotorCities' own journey. Was that not an example of that, where when the person donated the car to us, their donation was tax deductible for them, but then when we turned around and created income from it, then we had to then file it, right?
Yeah, so we actually, where I don't want to say get away with, because we're not really getting away with anything, but what, yeah, right, no, not at all. The way that you that it's not necessary basically for us to pay tax on it is basically because we are using the proceeds from, so we received a car as a donation, and then we sold raffle tickets. We use those raffle tickets towards our mission. So we're okay, basically. If we chose to go and do something else with it, and I don't even know what it would be for a nonprofit. Like I said, if we chose to now, okay, we're gonna take this money and you know, we're going to buy artwork with it or something, you know, something that really, then the IRS might say, well, you know, you're going to have to pay tax on that income because it's really not promoting your mission, which is to promote the automotive story, right? So I think those cases are far and few and to be honest with you, I think the IRS would be looking at larger organizations that might be maybe improprietous with funds. so yeah, I think the bigger question or the bigger issue is basically, the things that we've talked about, like you're selling t-shirts. For the moment, I can't think of other items that I had a client or a nonprofit that sold cookbooks. They were actually a food dealer association, and they put together cookbooks and sold cookbooks. So again, that was something that was a merchandise item. And even though the money may go for their mission, the IRS, they actually were audited, and they made a lot of money on their cookbooks. And they did have to file a 990T and pay taxes on it. So
Ramona, what are your recommendations in terms of formal audits for nonprofits in general? I mean, people, you can go full audit, you can do different things, you can periodically do an audit. What are your views?
So a full-on audit. So a lot of times, especially in organizations where they've had a board member, they've had an issue or something happen, again, that has been improprietous, immediately people say, we need an audit. And it's like, well, audits are very expensive. Okay, so on average, for a small nonprofit, an audit can be upwards of $15,000 to $20,000, okay, depending on how much has to go into it. So to be quite honest with you, if we didn't have to do an audit to satisfy NPS requirements, we probably wouldn't or shouldn't, to be quite honest with you, because the cost doesn't justify the basically the outcome or there's no value added. Let's put it that way. So I would say if you don't have to do an audit, a lot of folks that get money from United Way or other organizations have to, because United Way, again, just like NPS, they want to know that you're spending the money the way that you're supposed to be. Okay. So if you don't need to do that, then possibly you could do a step down of a review, and maybe do something every 3 years or something like that. Again,
an arm's length review of your finances.
Exactly. So you have, and it's it also helps, I think, because people or organizations then, the firm isn't there to just audit, or it's not like the big bad auditors. It's not like the IRS coming in, right? And people say, oh my gosh, an audit or a review. They're really there to add suggestions too. So a good firm will come in and do those kinds of things and hopefully suggest to the organization, you're doing a great job with this, but you could be doing this, or have you considered this? So hopefully it should be a two-way street. And you should get more out of it than just the confirmation that your financial practices are good, right?
Yeah. No, that'd be great. We do have a few other folks on the line. I was going to say, as far as questions go, Roger Luxick, because he doesn't have his microphone and all that set up, he's been hearing everything and has some questions that he's going to contact you offline. But
okay.
But any others on the line here, you got your shot to talk to a certified public accountant right here. We're paying the bill, so it's not like it's going to cost you anything. And we definitely have organizations who are getting started and have some ideas about that. I'm glad you brought up things like employees and taxes, because these are all sort of big steps that people end up taking that they have to sort of parse out. So any other questions for Ramona before we get ready to wrap it up?
And while you're waiting on that, there was something we kind of touched upon it, and I just want to reiterate, insurance. So insurance is important to organizations. That was in my notes here as I was flying through to see anything that I might have missed. Insurance is important. It's important in all organizations and, again, in our personal lives, right? So as a nonprofit, you should have some sort of an umbrella, insurance that may cover the contents of where you're at, like if you're in a space, in a rental space, as well as the organization itself, if there's a fire, you know, or again, if someone has some grievance against you or something like that. You obviously, if you have employees, you must have workers' comp insurance. That's a state of Michigan requirement. And third, and probably most importantly to a lot of people on the line here, you should have directors and officers insurance to protect your board members. So those are three things that as your organization grows, for sure as you start up, you should have some sort of an umbrella policy. And then as you add employees, have workers' comp, and as you move to having board members, because unfortunately, we're in a litigious society. We have been for a while, and you want to protect the people who are, in most cases, are volunteering their time and their resources to your organization. That's just another thing to throw out there.
Yeah, advice. Okay. Well,
drawing to a close.
Yeah, I was saying if there aren't any other questions, we
want to really thank Ramona, though. I don't know if we can do like a virtual chat or class or something. Thank you, Ramona. You've been terrific. It's been very helpful and insightful. And I want to make sure before I pass it back to Brian that we remember that next Wednesday on June 24th, Brian will be providing an overview on MotorCities grant procedures update. So that can be money for you and your organization, well, money for your organization, I should say, to help you with your missions. And so anyways, Brian, we look forward to that chat and next week. And I'll pass it over to you in case there's anything else you want to.
No, I think we've covered it all, and we appreciate everyone going along for the ride, and thanks, Ramona, for all the great information. You see what we get to experience on a weekly basis.
on a regular basis.
Yeah, all this great insight into how to manage things. So it's great to have her around. So, all right, so that is that. I think we covered all the waterfront. We appreciate everyone coming, and hopefully we'll see you next week.
Thanks, Ramona. Thanks for all your guidance.
Yep.
Great information. Thanks.
You're welcome.
Thank you very much.
Thank you. You're welcome. Bye.